Welcome back to the Dividend Diplomats YouTube channel. You've got your boys, the Bert, the Hurt Locker, and Lanny, the legend, the best dividend investors out here in all of social media, guys. And it's time for me to load up the truck on these two dividend growth stocks right now.
Smash that subscribe button. Give this video a thumbs up. Help your boys reach 21, 22, 23, 24, 25,000 subscribers and grow this channel so we can keep talking to you about dividend growth stocks and get reaching financial freedom.
Guys, a little bit of weird volatility going on right now, slightly, just ever so slightly. The market was hitting obviously all-time highs in the S&P 500, crossing 6,000. Obviously, your best friends over in the cryptocurrency space or the Bitcoin space, loving the hovering around 100,000 for the last couple of weeks. But we're talking dividend stocks here. We talk about dividend kings. We talk about almost dividend aristocrats here. We talk about stocks to buy right now. We talk about how you can build that passive income because that's exactly what we do. No matter what Bert's buying SCHD and VIG, no matter what I'm buying VYM, VOO, and VIG, but we still buy individual gosh damn dividend stocks. And that's why I'm tired of talking about two stocks that we've been talking about off and on for the last week or 2 weeks, 3 weeks, because that price just keeps getting better and better. I know, is this a trap? Is there a reason? Is there something that we don't know about these two stocks or these two companies? I think these are just really opportunities right now in the dividend investing space. But, I'll let you guys talk about that in the comments when we go through each dividend stock.
What we're going to do is we're going to run them through our screener, which focuses on those three metrics: the price to earnings ratio, the payout ratio, the history of increasing those dividends, and that bonus metric, the dividend yield. Lanny, let's just jump right in here. Who's this first stock that we are going to be talking about today?
We're going to talk about a stock that's down about 8% in the last month, down 21% in the last year, has been in a lot of headlines because of health, the pharmaceutical space and RFK and Medicare, Medicaid, and obviously somebody getting shot and murdered. There's a lot of, and then anesthesia being used, not being used in procedures. So we are talking about what is Anthem or Elevance Health, ticker symbol ELV. Yes, we are talking about this stock until we are blue in the face because this stock is not only below 400, not only below 390, not only now below $380 because both Bert and I bought a share each at 385 and they just keep coming down.
Yeah, and this sector is beaten down, and it's looked like it's going to face turmoil here, at least for the beginning part of 2025. Who knows, though, because no matter what goes on in the health sector, you still need to have healthcare. You still have to have coverage. You still have to figure out what's going on. And this company, Elevance Health, is one of the larger ones in said sector.
Yeah, one of the large ones. I mean, who knows really what they can't untangle health insurance. I mean, they can kind of help, reshape kind of what's affordable, not affordable. The Affordable Care Act. There's a lot of different things that can be done. But when it comes to your large insurance carriers, UNH included, United Health, it's hard to just get them apart from their intricacies within the health industry. But Bert, let's rip them through the DD stock screener here. We're going to talk about it, guys. $378.39. Again, down 21% this year alone. EPS is still at about $33 a share for forward projections for 2024. It's even better for 2025, so we're being conservative here. The PE is below 12 at 11.5, Bert.
All right, that payout ratio, their dividend is $6.52. That gives you a super low payout ratio of 19.78%.
Again, they can cut their earnings in half. It's still actually even below the 40% floor that we usually like to set. So again, a very safe dividend for the most part here.
And that's what, when you look at a stock that's in turmoil, this is the metric you should really focus on. If you see the price diving, but the payout ratio is not above 100%. It's not even above, to your point, Lanny, half of what our floor is in our perfect payout ratio range. So at least the dividend's going to be safe here for Elevance Health.
Exactly, guys. Now, they've been growing their dividend when you flash back to Anthem days, the ANTM shareholder days. I was one of them. You get about 12 plus years, maybe a little bit longer in dividend growth, average dividend growth, about 12%. They did the double-digit increase in 2024. Despite what's going on, they could still do a very substantial increase again come Q1 of 2025, where they historically, I think, do one. So I think they're going to be able to keep a high growth rate.
Absolutely, they can. So now with their price dropping 21%, net dividend yield landing, it's 1.72%. That's well above their 5-year average of 1.08%. So,
Yeah, you got to love it. Got to love it. Almost 2x what their 5-year dividend yield usually is. Almost 100 billion in market cap, so they're not a small player in the marketplace, guys. Again, a below 12 PE, below 20% payout ratio, 12 plus years of growing that dividend at a double-digit rate, guys, with the yield that's approaching 2%. I'm a buyer at these levels. We're filming this on Thursday, again on December 12th. So, by the time you watch this over the weekend, maybe just check the X, check some other platforms, and you might see that a purchase has been made if the price stays below 380.
Yeah, absolutely love it here. Let's talk about number 2. Good old reliable. Dividend Kings. Let's freaking go, Johnson and Johnson.
Man, guys.
Yeah.
Go ahead, Bert.
I accidentally said it there. It's Johnson and Johnson, ticker symbol JNJ.
Yeah, they're back, guys. I know, maybe they're losing a lot of steam, maybe they're losing a lot of flavor in the dividend space, but they're still a 61 or 60 plus year dividend growth stock that is just churns and burns, and the metrics just stay very consistent. They have, they've had some high growth, years. Right now, they're in a little bit of a lull the last couple of years, ever since, especially the spinoff with Kenvue, that consumer portion of J&J, guys. But they're down 4% the last month. They're down 9%, year to date. So they're kind of hitting a nice little low point because they're trading at now below 150, now below 147 at $146.24, guys. Bert,
Low point,
could you imagine?
No, I couldn't, because we always say their PE ratio is between 16 and 18. So let's look at that first metric. If we want to talk about low here, Lanny, that price to earnings ratio, when you take the earnings of 996, 146.24 divided by that gives you a PE ratio of 14.68 for J&J.
Oh, it is just, it's getting low. It's getting awesome. You got to love it. The dividend payout ratio is just as sweet too. I mean, paying $1.24 a share a quarter, a 49.8%, right smack dab in the middle of the payout ratio range we like to see at 50%.
50%, freaking beautiful. Their 5-year dividend growth rate is 5.54%, and they are a dividend king. They've increased that dividend for 61 consecutive years.
Yeah, the yield now is swollen up almost 3.4% at 3.39%, which is definitely trumping their 5-year dividend yield average of 2.81%, guys. So you're getting 58 basis points on the margin, almost a nice, smooth, 25% better, improvement to that historical yield.
So their PE ratio is 14.68, 50% payout ratio with a 5.54% 5-year growth rate. It's 61 years of increasing a dividend with a 3.39% yield. That is Johnson & Johnson, everybody.
Yeah, I mean, again, a 20% increase to the 5-year average yield. I apologize, guys, on that. But J&J, definitely liking them at these prices. I'm a buyer at this level. Again, I'm hoping that tomorrow morning, again, if you're watching this, the day's already done. The week's already over. But if they are below 146.50, I'm definitely going to buy at least a share of Johnson & Johnson stock right now.
Yes, keep an eye out in that DDX feed to see if Lanny ends up scooping up these. So you get some of our live trades as we're throwing them up there. We'll put the link, make sure it's down there in that comment section below.
Guys, are you a buyer at these levels? Are these two stocks to buy right now, in your opinion? Do you think these two stocks continue to grow that dividend, aka grow your passive income? Man, how is your journey coming along from dividend investing, guys? I know we've been on this, the YouTube network here for about 4.5 years, guys. So we definitely appreciate the support. And guys, like this video. Let's get this thing going, guys. We're at 20.1 thousand subs. Let's keep getting this community bigger on YouTube.
You heard it there, everybody. So everyone, again, subscribe. Lanny, what do we need to hit these people out with?
Guys, you're either with us or you're against us, Jack. That was Bert the Herd and Lanny from the Dividend Gosh Damn Diplomats. Over and out.